Good morning, guys. Welcome to this Monday, April 14th, and a fairly calm overnight for a change, right? For a change, fairly calm. 320,000 contracts on the micro. The ES is down to the Nasdaq is at 460, so a lot less than it's been the prior days, like last couple of weeks actually in the overnight. So that's a welcome change. Market gapped up on at the open, reverse retested the 5400s and stayed above it, and which is a pretty interesting sign. I like it, and they may be a sign of a little bit of strength showing up here this week. It is a short week, by the way, it's Easter week, so we got a full trading week until Thursday, and then Friday is off. So short week, full trading days up till Thursday. Thursday is a regular close, and then we have Friday completely closed. So that's what we got in front of us. And I would expect people maybe to start bugging out on Wednesday. Wednesday, Thursday, taking a long weekend there. So we may see trading volumes slow down a little bit towards the end of the week. Now, the news this week is pretty anemic, I think. Nothing going on today in terms of news. Tomorrow we get that 8:30 Empire State and import-export prices. We have a well, no auction either. On Wednesday, we have a fair amount of news coming out. The retail sales, industrial production, business inventories, housing market data, oil report, 20-year auctions. A lot of stuff happening on Wednesday. Thursday, housing data, jobless claims, Philly Fed at 8:30, and that's about it on 5-year tips auction on Thursday. And then Friday's off. So not a whole, I think Wednesday is the biggest news day we have coming up. And so it's not a ton of news coming out so far this week. So looking at the data we have going on here on the ES, pretty much maybe I'll even be able to reopen my bid-ask chart again. That could be an interesting one. See what that's going to look like. But this volume is now back into at least territory which we can use, which can be usable, you know. So gapping up, we have this whole area in front of us, the 5500 to the 5570s. We need to clear, and that's what's coming up ahead of us. If we can get through that part of this area in front of us, we may have a good shot at seeing some action going on or seeing some actual strength developing. Maybe signaling some of this signaling the end of this crazy tariff back and forth. I think this pause, if everything goes well, then the tariffs are pretty much going to be staying off to the most part. You know, it's some of them are obviously we're stuck with, but as they negotiate trade deals, these reciprocal tariffs may not even have to come back on again. So we'll see how that develops. But right now, it looks like the market is showing a little bit of strength. We have this area right there at the 5730s. That's the area. If you can get up above that area, we may be in good shape. But first hurdle is going to be the 5500 to 5570s. Then we get up to this area, the 5670s. And then we hit the 5730s. And well, if they clear the 5730s, we may be on our way back up again. So this is going to be our area of twilight zone before figuring out if the market really has the strength to make this happen, or if it's just the bear market rally kind of dynamic where they have a nice little pop and then they just reverse right back down again. So that's kind of where we are on the capital flow. So at this point, I'm going to start off on the long side, given the overnight, given a decent close on Friday, because I had a pretty good strong close on Friday and gap up and the continuation, and we like that. So looking at the traders on the long side of the market to get started, watching this level, the 5410s. If they trade below that 5410s, we have back range bound again. So looking to buy against 5450, 54. 55s, 45s, 25s, down to the 10s for rotations back up again. So I'm going to buy against the 55s, 45s, 25s, down to that 54.10 level. And then below that one, we just take off the long bias and go back range bound. And on the way up, a little bit cautious on the short side of things. We're getting into probably like around 54.90 here with a little high volume attractor. So I would probably key in on 5500, this level right above it. So that would be right when this volume kind of tapers off a bit. So 5500. If we get up above that one, I think I'm going to stay on the long side, but I think that could be a better short. Anything in this area could potentially develop into a nice short setup because this is your first area of congestion. So getting past this area above the 55, 60 to 70s, I will be very welcome, but we'll see if they can pull that off or not. At this point, though, we may, it's a short week, holiday kind of a week. And the good news is that the volatility definitely slowed down in the overnight. So we may have a little bit more of an orderly session in front of us. But starting off on the long side, let's see if they can hold on to these gains and potentially take it higher. But definitely looking for, as I said, short setups up to, let me see, like hang on, there you go. So short setups against the 54, initially 70s, 85s, 5500s, up to that 5520s. So these are the areas I would be looking for short setups against. A little bit of caution, but these are pretty good resistance areas. So if they can get up above the 5520s, maybe you have a shot at nailing that 70 level above it. But area of resistance in front of us. But given the strength in the last on Friday going into today, then I would just be a little bit cautious about it. I think the better ones comes a little bit higher up here at the 85s, the 5500s, and the 5520s. And if they hold, probably going to stay in the range between that 5520s and the 5400. So it's a 100-point range. It's a pretty good range as well at that. But starting off on the long side, let's see how far they can take it. And be mindful, these are pretty good areas of resistance ahead of us. I would just be a little bit cautious going, just watching this overnight, see how strong it's really going to get. But yeah, as usual, you look at the resistance area, you look for a setup and a trigger before you hop on it. So ideal level, setup, trigger, that's what you're looking for. And if you get all those lining up, then by all means, take the trade. So that's where we start. Let's see how strong this is going to get. Looking at the NASDAQ and the bonds. The bond market, not crazy in the overnight. Not showing a massive amount of strength either. So they are heading back up to this attractor area. They were down probing here Friday at 11, 15, 16. And this is why we could get a little bit gnarly. Because the Chinese are going to start selling treasuries. They're going to try to mess with the bond market. They just order to stop these rare earth exports. They're going to try to mess with the defense industry like that. And just tells you don't want to be reliant on a country like that for your defense needs. So there you go. And the fact that they're so willing to do that so quick, that just tells you the tenderness of that situation. You don't want to be reliant on it. But then that whole thing with the China trade war, that's going to be definitely be going on for a while. So hold on to your horses on that one. But then right now, though, on the bond market, we are heading higher, and the whole point here is really if the bond market starts getting wobbly because they start dumping bonds from China, then yeah, there could be another downdraft on prices, yields spiking. But I think they could very well. There's probably ways they can counter that as well. But that could be like short-term volatility created in the bond market. At this point, though, I'm going to be starting off range bound. Slight bias to the downside. If they can get up above that 113.26s, 26.27, I think we are back up here in that 114, 15, 16 area. A little bit higher, and you get into this attractor area. So at this point, looking for them to, I'm looking for a short setup against 26.27 for rotations back down again. But it's starting off pretty range bound. That's the only short I'm going to be looking for. If above that, I'm going to be looking for a retracement back up to that 114, 15, 16, and maybe staying in a range. If they take out these lows at the 113, 130, well, 1230 to 113 and the 113, 3 to 4, these two support areas, look out below. I think that we may be heading lower at that point. So I would lean in on the short side if that starts happening. All right, so that's the bond market. Watching that as a hawk to see what's going to happen. If that starts moving lower and yield spiking, that could get definitely shake around the market a bit. Nasdaq also nice gap up. You can see it's pretty obvious gap. No really reverse retest on that guy. So they never closed this gap. It's kind of holding on to their gains. So Nasdaq also getting into this area. They're right in this congestion area right now. The 19,370 down to the 19,140s, like a 200-point range here. That's your congestion area on the Nasdaq. If that comes out, we can start to head up all the way up. Next level up is going to come up here at the 20,000s. So we'll see. Nasdaq could have a nice little recovery here, but they're not as crazy back and forth as the ES has been. So if you look at the ES capital flow, it's not quite as obvious. You know, if I fold that stuff together on the ES, yeah, maybe I'm gonna look at that in a little. We'll take a look at it when we get back there, but they're definitely in this congestion area. So Nasdaq feels a little bit stronger. That's starting that from the long side as well, looking to buy weakness, 19,070s, 20s, 980s, or 18,980s, and 930s for rotations back up. Below the 930s, I would be looking for gap closure kind of trade down to the 860s, maybe lower. And if they start trading below 860s, we're back in range bound to the downside here again. So initially looking to buy weakness, 19,070s, 20s, 18,980s, 18,930s for rotations back up. And on the way up, move this guy out of the way. That upper edge is at the 370s, 19,370s. I could drag this guy down a little bit like this. So looking for short, a little bit too much. There you go. A bit more. So 180s, 260s, 320s to the 370s for rotations back down. So the first one here at the 19,090s, definitely a potential short opportunity. Then against the 260s, 320s up to that 370 level. And if they start taking out that 370s, we may have a good thing going. So we'll see what happens with that. But fair amount of range to the upside and as well to the downside. And we're trading right in the middle of this little congestion area right now. So we'll see how they can go. But starting off on the long side, let's see how strong this can get. All right. And if it just runs out of gas, well, then that's it. So then we're right back in that lower range again and staying range bound. And then oil and gold. Gold really had moved higher. So they're up in the 32.50 range right now, holding on there. And it looked like it stalled for a bit, but they had a pretty freaking good move to the upside. You can see this one here. That's our Friday trade. Big move from the Friday, Thursday. So Thursday and Friday, they literally moved from the 3,080, almost $200 to the upside. So that's how crazy that was. So fear of global uncertainty, I guess, is moving a lot of people into gold. And we'll see as global uncertainty settles, because it's going to settle. Eventually, rearranging the trade order in the world is not easy. And then not without any turbulence, that's for sure. But it's probably the right thing to do, given what's going on or have been going on. So starting off to the long side, range band with a bias to the upside on gold, looking to buy weakness, 32.30s, sorry, 32.35s, the 28s, and the 20s for rotations back up again. So 32.35, 32.28s, 32.20 to 21s for rotations back up. And looking for short setups against the 49s, the 53s, and the 3260s with a lot of caution. Not going to be super aggressive on those shorts. Sometimes they set up nicely, but just have to be very careful about those shorts because when it moves, it moves. You want to be right now the capital flow is to the long side of the market. So when it moves, you don't want to be stepping in front of it. That would be usually a pretty rough trade. So starting off, range bound with a bias to the upside on gold. Prefer to buy a weakness. Watch that lower edge 3220s. If that comes out, maybe look for a retracement trade to the downside. And oil is slowly grinding back up again, given the tariff thing settling in. Looks like when there's good news in the economy, or not good, well, not good news, but less hassle. Looks like the oil wanted to trade back up again. So demand destruction due to recession fears, that drives oil down like this, and when it comes off, it starts creeping back up and see how far it can go. But unless they take out the 63 to 64 levels here, these upper areas of resistance, I'm not going to worry about the long side. If they do take it out, definitely look for a retracement trade back up to the 66s. But at this point, looking for a reverse retest for rotations back down. So looking for shorts against the 62.75, 63.20s for rotations back down. Above that, probably looking for a long retracement trade. Now we don't have much to lean against there. So that three-letter edge is going to be the one to watch. They take that thing out, I think we are retracing back up again. So, and initially looking for short setups. If I get early weakness, I'm going to look into buy it down at 61.70s to 61.30s, given that they have been retracing a bit. So looking for that, I would be buying early weakness, but not lower than 61.30. So that comes out, we are back range bound, and they start taking out the session lows at the 61s. Just stay on the short side at that point. And then we are back in this lower range, potentially heading lower again. So that's oil. Let's see how strong that's going to get. If the market rallies, could certainly drive oil a little bit higher. So I would not be surprised if that happens. But these first two resistance areas, looking for shorts against them. If they both come out, stay on the long side. If they don't, look for retracement back lower. But not unless they take out that 61.30. So I'm really going to start leaning in on the short side. Definitely confirmation below 61. So these two support areas at 61 and 61.30, and not buying lower than that. So, and if they get down here in the afternoon after they retest the highs, I would not be looking to buy them at all. So at that point, I'm looking for lower prices. So that's oil for you. So starting off oil on the long side, let's see if they can take out these upper areas of resistance. On gold, same story there, looking to buy a weakness below the 32.20, we're taking off that long bias. All right, so back to the ES, and I did fall together on my capital flow chart a couple of levels. You see here, this is your congestion area right there, and up to that four-letter ledge, 55, 60 to 70. So they can get up about that level, that ledge right there. That would be a pretty strong move. All right. But at this point, starting off ES and NASDAQ from the long side, looking to see if we can get some further continuation of this strength which popped up a little bit late last week and has been with us in the overnight. Alrighty, guys, we'll wrap it there. Nothing going on in news this morning, so nothing much to lean against there. So we'll wrap it there, guys, and I'll see how this goes. So good trading, and I'll see you back at 11:30 for the next update. Later.